Alright guys, this is FX Mesh coming your way again. Um, Welcome to my channel. Uh, Price action for some forex pairs and indices. We actually go over to some forex pairs and indices pairs to see how the market behaves and trying to identify market structure, trying to identify the overall behavior of the market, looking at the trend of the market, looking at psychological levels and key levels, and using different kind of things to attack the market. Now, the most important thing about forex is that we want to make money, and it all depends on what your own plan, what you tend to achieve in every trade you execute. Now, forex uh, is a get rich scheme, but on a long term. So when you're coming to forex, you need to understand that you need to first of all understand the behavior of the market, understand what you are willing to risk, and when you're able to understand what you're willing to risk against the amount you're putting, then you're able to manage your account properly. You are able to organize yourself in such a way that you're able to use a certain strategy that you believe you have tested and it works. Now, many people always use demo, which is good. I use demo sometimes when I've not entered proper trade, but I want to just test my knowledge and my perception about as to what I think will happen. And once it plays out, I'm like, well, yes, I keep trying that, doing like just like that. But you have to practice and do a lot of practice. And one other very important thing in forex is that your previous success, your previous profits, has nothing to do with the prevailing, the current trades you enter. Your previous success has nothing at all, absolutely. If you made a $1 million yesterday, your trading now, the trade you have entered now, has nothing whatsoever to do with whether you will make profit. There's no guarantee. But what you're trying to do in forex consistently is like you're trying to build a character. You are trying to find a kind of a philosophy, a principle, such that each time you see whatever the market throws to you, each time you see what the market has given to you, you're able to have enough information, enough tools to be able to handle the market. It's either you are entering into it or you're leaving the market. That's how forex works. So it's not you're trying to be perfect. There's no perfectness. Even the best traders, the banks that significantly put a lot of money, we see the banks do that in significant news events like the NFPs, the interest rates, the CPIs. When these data are being released, this put a significant amount of money into the system and to take out traders out of the market and reverse the market back to the direction that they originally wanted to allow it to go to. So the banks make mistakes sometimes. They have psychological level they look at. Sometimes they trade the wrong way and they lost money as well. They lost a lot of money as well. So just like everybody lost money. But the ability for you to not be greedy, the ability for you to know the amount you're able to raise, like I said, that's how you will be able to be successful. There's so many things involved in forex, apart from just understanding the analysis of what the market could play out in. You also need to know how to measure the amount you want to risk. And I would like you to always use the position size calculator. You can go to babypips.com, or you can just Google position size calculator, then find the search of baby pips and just click it, and it's up here in the description here. So I'll be showing you what it is so that you can understand what I mean there. So this week has been a little bit well, I'll say the US dollars has at some point it was going up, then it began to consolidate in the last 2-3 days, and I wanted to focus on indices, to be honest. And once you talk about indices, you're talking about the fact that if the US dollar is gaining strength, the indices will go down. Just check it. Check any of the US pairs against indices. When I say indices, I mean US 30, NAS 100, which is NASDAQ. we have German 30, we have S&P 500, you know, all those kind of pairs. Or you can just search on Google and just have a list of it and get used to it, you know. And these indices are the performance of, let's say, for example, German 30 is the performance of the best 30 companies in Germany at that point in time, at every point in time. So NAS 100, the best 100 companies in America at that point in time. So just like that. So I trade indices because I see that I have a rule of thumb in trying to attack NAS 100 in the indices. So, and it has a specific time of it actually reacting in the market when it starts to really move. I think it's around 3:30 New Zealand time. I don't know what that will be in your country, but 1, 2, 3, 4, 5, 6. I think 6 hours before the end of American session. 6 hours before the American session. That's when it starts to react. I'll put it that way. So whatever it is in your time zone, that's what it's gonna be. So that's what I tried to do this week. I tried something different because I was busy doing other things, but I didn't trade much this week. I just took, well, there's a little account I had. I moved it, I think, from 150 to 200. Then one of my accounts. Then another account I had, I'm still in losses because there was no really significant movement of the US dollars. I was expecting US dollars to gain strength. Then I also took a sell. So when US dollars going up, the indices goes down. But again, it depends on the kind of US dollar pair. Like for example, you have a US CHF, a US CHF, USD CHF will go up because the US is a prefix, while the you understand what I'm saying. So for the indexes, if indexes is gaining strength, it means US is going down. So you just use that rule of thumb. Then I also use Frib levels very well. Frib levels helps me a lot, and I think it will help you as well. So let's go over to just to wrap up the this particular episode for this week. I didn't do much, so I'll take you to the chat and you see what I've done so far. This is FX Mesh smashing it. What is going on, guys? Look at the screen. Beautiful pattern. USD card, 15 minutes time frame. Okay. Up, down, up, down, up, down, up. You can see the trend pushing to the upside. I entered here because I expect the market to push up as a result of the impulse. There's one principle you need to understand in trading is that each time there's an impulse, there's also a correction. If each time there's an impulse, many times there's always a correction. This is an impulse. There's going to be some kind of correction here, something like this. It's going to go up and down like this, play around here, and I expect to push the upside, you know, and do whatever it wants to do. You can see that there was an impulse here, a bit of correction here. Then they push to the upside, then down, and just like that, you know. But you can see the direction is pushing to the upside. This pushing upwards, down, consolidation a bit here, then up again, then down, then up here. But this is my plan. This is the plan. Something like that. So I think this was gonna be. I'm already in profit already. Just wanted to show you the pattern. So we'll see how it goes, like a triangle, but an expanding triangle. It looks like as it's going up, it's increasing. USD, this shape is supporting USD gaining strength, and we can see from the dollar index that dollar has been going up since the previous week, pushing to the upside. Even if you look at it from a higher time frame, you'll see the push of dollar in the up direction. You can see 1, 2, 3, 4, 5 days. The last 5 days, which is last trading days, Monday, Tuesday, Wednesday, Thursday, Friday to Monday here now. You can see the dollar pushing to the upside. So, and there's an impulse here. So definitely it appears to be a correction here. Once it's pushing up, it means dollar is getting strength, and if the dollar is getting strength, USD card, of course, it's gonna go. It's gonna go up. So I'm watching it and see how it goes. This is my first trade USD card for the week. Back to the chart, you can see exactly what I explained, that when the market after the market has pushed to the downside, I was around here when I was about to enter. I entered this market just to see what's going to happen. You see the reaction I talked about. After an impulse, it's a correction. After this correction, I expect the market to push up. So that's how it is. But anyway, I jumped out because I would like to enter the market after the London session to be able to see how the market reacts today. The market is just behaving like it wants to. It's going to be showing strength of more strength of USD. It appears that the market is going to show a push to the upside in the DXY, which means the US dollar gaining strength, and in turn that will lead to the let's see, the dollar gaining strength. So so what is this particular let's see what this particular is again. That's USD card. Yeah, USD card rather. USD card. Yeah. So USD card, you can see the channel building up. So I expect the thing to push to the upside. It has fallen back again to the same point of entry. So let's see what happens after we enter London session. If it's going to fall down, I expect it to push down or shoot back, fall down into this losses area, then push to the upside. I jumped out actually. I entered, but I gained some profits, then I jumped out. I think it will not be wise for me to just start trading like that, so I have to wait for it and allow the market to play around first, then settle, then I begin to see what's going to happen. I'll catch you again, guys. Back to the charts. Today is Friday, the 8th July 2022, 7:02 New Zealand time, and we've just entered the London session. In the previous video, I was using a black and white coloration for the to identify the candlesticks, but here I've changed the candlesticks to green and red. Green for the bullish candlesticks, while red for the bearish candlesticks. Now, I was explaining something for you here the other time, that I felt the market wasn't behaving the way I would like it to behave, and you see what happened. You see, when I got here, I traded a little bit here, but I jumped out. I made a little bit of profit and I jumped out. Now, what happened? I followed my intention and I waited for the market to play out, and you see what happened. From this point, I've been busy. I didn't even trade USD card, and look at what happened. The market tanked down. If I'd entered and I held this trade for a while, I would have been into significant losses again. You see, I jumped out, and you can see that it was obeying this channel. You can see the channel, wonderful channel, you know, beautiful channel, and I expect to push to the upside. But what did it do? At this point, it tanked down. Only to find out it pushed to the upside later. So that is why you don't just, when you see a proper pattern, you don't just enter the trade like that. You have to watch for certain things before you take your entries. You can test on demo and see what your thoughts would kind of play out with. But when it comes to the real actual trading, you have to be very careful. Check the patterns. First of all, check the trend lines. So the trend of the market. Then identify key levels. Then you know, and just use your free retracement tools to test for reversals and all those kind of stuff. But in this particular situation, the market appears to be in a channel that is expanding like a cone, but all of a sudden it began to react here, and I was quite fortunate that I didn't hold my trade longer. I would have fallen into losses. Now that would be, let us see what that day was. Okay, let us appearance. Okay, now that day was on Monday, got it 4th of July. On Monday, early that July. That's when that the previous video I recorded that video, previous video. Now it's Friday today, and look at where the market has gone. What has the market done? USD has gained significant strength from here. It pushed up here, so USD has gained strength, and you can see a significant push, especially on Wednesday. On Wednesday, there was a significant push to the upside, and with a lot of pips, 1 or 200 pips to the upside. Then it's kind of it's trying to test this. It's coming back to test this this level. You can see it testing this level. Testing this level. Now we just enter London session and we have a USD card. So what I want to do is to look at this market properly and wait for the market to settle, this London session to calm down properly. Then I might take a free level from this level because I have an impulse here. This is a correction. This is a correction. This is a correction. I told you before, if you have watched my videos, I said that many times when there's always an impulse, there's always a correction that follows that impulse thereafter. Impulse, correction on blue, another impulse. Okay, it's another impulse. Now I'm expecting this market to, it's a little bit murky here. The candlesticks are a little bit, the market is a little bit struggling here. I would rather leave it, or I was thinking of taking a free level to a free level sale. The reason is that if I take a free level sale here, if I take my free here, right, I'll wait for retracement. Around somewhere around here, and consolidate a little bit. Then I begin to take a sell downwards. But what I will do is I trust my instinct, and I think that I'd rather leave the market because it's not, I don't like the way the market is here. The candlesticks are too small, and it appears there might be kind of a consolidation here. So the best is to leave it. This line signifies that today is Friday, and it's already evening into the Friday. So what do I need to do? Just leave the market, just leave it alone. Now let's go to the one I entered, and I'm still holding it. Is a loss. I'm still holding the loss. This is I entered the NAS 100, and I will explain to you what happened. Let me remove the sectional break first to make you understand what how I entered the trade and how I got. Now, first of all, there's a rule of thumb, and you can see it from the relationship between USD pairs or the strength of USD dollar to indexes. Each time indexes is going down, US dollar will go up. That is a rule of thumb when trading indexes. When I say indexes, I mean NAS 100, I mean German 30, US 30, NAS 100 USD or Nasdaq. This is Nasdaq or NAS 100, US 30, US 50, US 500, okay, and this the German 30 as well. There are other indexes as well, but I just want to I'll just give you an example of the ones. This one, NAS 100, US 30, US 500, German 30. These are indices. Okay, these indices have a relationship with US dollars, and each time indices is going up, US dollar will be going down. Now let's look at it. Let's try and check based on observation. You can see NAS 100 is pushing downwards, right? Now, if we have any US dollar that has a prefix of US any currency, so any currency pair that has US on the prefix, it will definitely go up because of the strength of the US dollars. I will repeat it myself. This NAS 100 then is going down. Overall trend is going down on the 4 hours time frame. Because it's going down. Any US pair that has the US dollar as its prefix will go up. Now let's check it. US dollar chef. You see? Up. It pulled back, but it's still going, it's still up. Pull back again, it's trying to make push to the upside. Okay? So I'll clean, well, let me don't clean this one, that's not what I'm talking about. Now go back to what I'm trying to talk about. So you see that NAS 100 has been pushing to the downside, to be honest, on the 4 hours time frame. But because we are concentrating on this part, look for the latest part of the market, we want to see what happened. Now I entered this market, I think around I entered this market at about I think Wednesday or Tuesday, and I was expecting that the market is going to fall more, at least to somewhere around this area. But I drew my take profit to this point. I didn't put take profit actually, but I just marked it here, put it down here for the meantime. And what I was thinking was that because of this impulse here, you see this impulse here, I took a free level. Is it? Yeah. Because of this impulse here, I took a sell. I think, yeah, I took a sell. It was going down. Then it was going down. Yeah, I think it's a sell. Let me check it. Let me just check. Just a second. Let me check what I took. I think it was a sell. Just checking my phone for the. Oh, I can even go to. Let me check my phone. It's more faster. Yes, I'm still hanging. Yeah. So NAS, I took NAS as a sell. I was expecting NAS to kind of push down. Now, what NAS did was that it pushed down. It actually pushed down in its profit. Then after a while, it started pushing up. After testing this level, this is a level. This is a price level, and it tested it and it pushed to the upside. Now I'm seeing losses. I mean, about $148 loss for now. I expect this market to push to the downside. So because this market is on the 4 hours time frame and the position I am in, this market is going to be, I expect this market to be a very long trade. I'm going to leave it. I'm going to keep holding while I trade other pairs, because I think I have enough money to handle this. I have enough space to handle enough margin in my account to handle these losses for now. So it means I can take other trades. I'll be looking out for opportunities in other places, and I think I found an opportunity in GBP USD, and I will explain to you. This is a 4 hours time frame. You can see on 4 hours time frame that if you take a free level from the previous impulse, now from here to here, from here to here on the 4 hours time frame, take a free level from here to here, and I at least said I have reversal points. 0.61. I watch out for reversals at 0.61. I watch out for reversals at 0.5, which is here. I watch out for reversals at 0.38. So these 3 points, once the market will reverse around these points, that is where I begin to check. I'll look out for opportunities, and you can see that I've already marked this before I entered. I marked this before I entered into London session. London session started 7 o'clock. It's already 7:13 now p.m. New Zealand time, and I can take a sell comfortably. Take a sell from here to here. My take profit will be actually here. I don't want to be too greedy. I'll just take here and see what's going to happen, because the market appears to be a little bit I don't know how to explain, but it's not behaving well. It's a little bit up and down somehow. So I took a sell on my demo, and I'll show you what just before London session, just to show you how much I made in a $10,000 account. You'll see. I'm going to post it here, right here. So I'm looking out for more opportunities, and I'll catch you on the other side. Peace out.